In 2018, Iran took a blow with the most brutal US sanctions imposed on its oil and economy. But as the coronavirus knocks out global markets, Iran, this oil economy, seems to be standing. Well, that's because we've gotten used to missing our crude sales and revenues. Thanks to US sanctions. That is not to say Iran has not been at all affected by the global drop in oil prices. In this episode, we'll be assessing the relative impact of global oil markets on Iran's economy and just how vulnerable or less vulnerable Iran is to the blow compared to its neighbors. You're watching Iran Today and I'm Leila Faramarzi. Do stay with me for the next 20 minutes or so. We've got four experts today, fields players in oil and the economy. Let's hear Mr. Hosseini. He was Secretary General of the Iran-Iraq Chamber of Commerce. Compared to other regional states, how hard a blow do you think Iran might take?
تقریبا تو کشورهای منطقه وضعیتون از همه بهتره یعنی وقتی وابستگی
Compared with other countries in the region, our situation is the best. The government budget and revenues dependence on oil has declined due to sanctions in the oil sector. In the current calendar year, we envisage 450,000 billion riyals in oil exports for budget spending. Natural gas exports can compensate for oil export shortfall. We are already exporting 42 million cubic meter per day of natural gas to Iraq. We will also resume gas exports to Turkey very soon, even if the pipeline carrying gas to Turkey is not repaired after the recent blast. Turkey will have to pay for our gas. Exports of natural gas, electricity and petroleum products would partly compensate for revenue shortfalls. However, we will be facing a budget deficit this year, but we will have fewer problems than our neighbors.
And how vulnerable or little vulnerable might Iran be compared to regional states?
با توجه به اینکه ما در قبل از کرونا
As even before the COVID-19 outbreak, we were under unjust sanctions and the Iranian economy was therefore resilient. This is why we are under less pressure than our neighbors. We have already been through these hardships. For example, if the world is seeing demand for oil falling now, Iran's oil exports had already dropped sharply due to the sanctions. That will definitely affect state tax revenue, as the economic growth rate has fallen. When the volume of economic activities falls, our tax revenue will fall too.
As the coronavirus tears through the world, pushing people indoors and bringing transport to a minimum, demand for oil and petrol dwindles. And black gold is begging for a new home as producers don't know where to store their surplus. Iran seems to have some factors in her favor. Has corona been any good for Iran, talking of the oil market?
ما 1% جمعیت دنیا هستیم.
We constitute 1% of the world population. We sit atop 18.2% of world known reserves. Oil and gas combined together, we rank the first in the world. We have as much oil and gas as 2 times Russia, 3 times the US, 8 times China, 15 times Brazil, and 42 times the European Union. Therefore, the world depends on our oil and gas. The current conditions are temporary and will be short-lived. Thanks to social distancing and race for developing vaccines, the demand for oil will be finally back to its previous levels.
Current crude oil prices will severely affect the economies of countries that are heavily dependent on oil revenues. However, 2 key exporters, Saudi Arabia and Russia, are themselves firing up the game in competition with America. They have been actively working to lower their prices to bring US shale to its knees. Mr. Hakshanas was a maritime organization economist turned governor general.
در سالهای اخیر در واقع 2 بازیگر مهم در بازار نفت.
In recent years, 2 key actors have emerged in the global oil market, namely Russia and the US. The US is mainly producing shale oil. Shale oil production costs much more than other varieties of oil. Each barrel of shale oil production costs around $30 to $40. Now, if oil prices fall below certain levels, shale oil production will no longer be economical.
As such, as the demand for oil dwindled with the corona outbreak, the breakdown of OPEC Plus meetings in Vienna in early March drove oil prices into the ground. This caused an oil price war between Saudi and Russia, with US shale production the ostensible target. If the standoff continues, however, the two oil giants may be the losers in their own war. Uncertain as they are about the depth of the coronavirus's impact on the globe, they are contributing also to a sharp decline in the global economy.
Saudi Arabia's budget deficit is much more serious. It's like a rich family determining a specific luxurious lifestyle. Now, for any reason whatsoever, it cannot live that life. Therefore, life will be painful. But countries with simple lifestyles will have an easier life. One point with Saudi Arabia is that this country has generated big assets outside borders in recent years. Now that oil prices have declined, Saudi Arabia may dip into its assets held abroad. All countries in the world have created their respective sovereign wealth funds. Norway was the first. Arab countries also have their own funds. In Iran, we established the Oil Stabilization Fund. Another issue is demographic. Saudi Arabia's population is 1/3 of that of Iran's. Therefore, 1 million barrels per day of oil exports would differ in Iran and Saudi Arabia.
We might actually have been seeing a significant restructuring in US shale if prices had been maintained at $30 and below over an extended period of time. The thing is that even before the coronavirus and OPEC Plus deal, we were already seeing overproduction and capital expenditures by US independents. The point is, in spite of US independence, overindulgence and short-sightedness, there has been a miscalculation on the part of the Saudis and Russians, because causing extreme pain in the US shale sector for 3 months or even 6 months doesn't mean shale will break. Shale oil is extracted from oil shale. That's a sedimentary rock containing kerogen, a solid mixture of organic chemical compounds from which liquid hydrocarbons can be produced. It is a tough-to-extract substitute for crude oil. But the US decided to turn to its own shale in boycotting high-quality Iranian crude oil and weaning itself away from dependency on Middle Eastern or West Asian oil.
در کشورهایی که با استفاده از فناوری‌های
But in the countries where various technologies are used for secondary and tertiary oil recovery, or when the US and Canada spend too much on shale oil and gas production, the slump in demand for oil costs them too much. If they shut down their activities, they will have to spend heavy investment when they decide to make conditions economically viable and new. Apart from that, oil must trade at $60 a barrel to be lucrative for them. Therefore, the current conditions have harmed the entire world, but we have suffered less because we had already had to take some technical measures to find alternatives.
US oil production dropped by about 900,000 barrels a day. That's down from its 13.1 million barrels a day high in 2019. The damage may be unparalleled in the last 100 years and more, and a main contributing factor is Saudi's reckless increase of oil production and exports. It did say it wanted to increase its production to 12.3 million barrels a day, and it has already slashed its official prices for all customers globally. All causes to one side, the COVID-19 pandemic has played its part separately and efficiently in making the energy industry seemingly suffer more than most all other sectors.
اتفاقی که بسیار نادر
The rare outbreak of a virus like COVID-19 forced everyone everywhere to stay home and respect social distancing and limit their everyday commutations. Therefore, the global demand for gas, oil and gasoline fell sharply, and the storage tanks of middle distillate refined products, as well as storage tanks for refinery feedstock, were full to the brim, forcing some nations to halt their production. Naturally, it gives a headache to the entire world.
After exiting the 2015 Joint Comprehensive Plan of Action in 2018, the US reimposed sanctions on Iran. Initially, the US provided waivers that allowed big economic powers to continue importing crude from Iran. Those waivers, however, ended in April 2019, helping push up the price of Brent crude, the international benchmark, to above $75 a barrel. Iran exported 2.5 million barrels per day before the US decision to reimpose sanctions, and by the time the waivers ended, Iran's oil exports had dropped to 1 to 1.3 million barrels per day. Most of Iran's crude exports went to 5 main buyers: India, China, Japan, South Korea, and Turkey. The biggest players are suffering the most, whichever side of the war they are on, meaning the United States as well as Saudi Arabia and Russia. In early March, 9th March, at the New York Mercantile Exchange, Texas light oil, WTI, for the first time in history reached minus 37.63 per barrel. The US has become the world's largest producer due to a boom in shale oil. Russia has a budget break-even price of $40 per barrel of Brent. Saudi's is $84. Russia can produce over 11 million barrels per day of oil without breaking a sweat. Saudi's average since 1973 was just over 8 million barrels per day, talking mid-March 2020. Brent oil extracted in the North Sea is used as a common benchmark for the broader oil market because it has greater and faster access to large markets. This is why the WTI Texas light oil is now used above all as a reference for the American market.
During the years when the oil was traded at around $70 to $80 per barrel, the US brought its production to above 10 million barrels per day. Russia also raised its output to around the same, once Saudi Arabia was the only nation with such production capacity. Another point is that OPEC makes collective decisions with Saudi Arabia, accounting for 1/3 of OPEC's output. It was always influential within OPEC decisions and oil prices, but after the new actors, for example Russia and the US, entered the market, Saudi Arabia's role was weakened.
Time for a short break. We'll be back in no time. Saudi Arabia started the oil war or oil games on March the 13th, 2010. It did pay off, but this time Saudi Arabia became the most adversely affected country in this war. And Saudi officials' actions and recklessness while damaging the US and forcing a protest from its president have caused great damage also to its own neighboring oil exporting countries. It's time for a closer look at world media. To see what other news outlets are actually saying, I give you Shahrzad.
Hi, my name is Shahrzad Manucheri, and this is the news section of Iran Today. We'll be looking online for the latest update on the global plummeting of oil prices and Iran's relative resistance to it. Reuters states Iran says it will fare better than other countries after oil crash amid battered economy. Iran will not suffer as much as other countries from the oil price plunge as it is less reliant on crude exports, its president said, with the state budget depending far less than before on oil revenue due to US sanctions. The sanctions have limited Iran's financial options to keep its economy running, and most of Iranian revenues from oil sales are locked up in foreign bank accounts. The more countries rely on oil, the greater they suffer. But as our reliance on oil income has decreased, willingly or unwillingly, either by our own will or by the imposition of the enemy, our losses will certainly be less, Rouhani said during a televised meeting. In an article by Tehran Times, we see how Iran's oil production not halted by coronavirus outbreak. Iranian oil minister Bijan Namdar Zanganeh says the coronavirus outbreak has not halted oil production in the country. Speaking in a meeting attended by First Vice Presidents Eshaq Jahangiri and his deputies, Zanganeh elaborated on the oil ministry's measure for containing coronavirus, saying that the ministry has made serious efforts to prevent any stoppage in the oil production while protecting the workforce. Oil Ministry's measures have been taken in 4 phases of prevention, readiness, confrontation, and returning to normal condition, the official said. Earlier, head of National Iranian Drilling Company, NIDC, had also said that despite the coronavirus outbreak, all operations in the country's oil and gas rigs are ongoing in full compliance with safety and healthcare standards. Modern diplomacy takes an inside look into oil and gas geopolitics and its end. It is to be said that if there's a recovery of the oil market, demand could reach 90 to 95 million barrels a day. But the country recording the greatest loss of production will certainly be the United States, which has the highest cost of oil barrel production. Meanwhile, in its anti-coronavirus aid program of April 30th last, the Federal Reserve envisaged direct support to U.S. oil and gas companies. As many analysts maintain, however, several companies of the shale sector, which live only on high prices, would go bankrupt by the end of 2020. In terms of global assessments, however, world oil demand is estimated to fall by 19 million barrels a day during this quarter of 2020 and by 8,600,000 barrels a day throughout 2021. Economic Times claims Iran's Zanganeh says hard to predict oil prices as demand is unclear. Iran's oil minister said it was difficult to forecast crude prices amid uncertainties over prospects for demand, Iranian state radio reported. No one can predict crude prices and now the demand is vague, Bijan Zanganeh told state radio. Oil prices rose in the past week, reversing earlier losses, as countries around the world continue to ease lockdown measures imposed to combat the coronavirus pandemic. It is not clear when the world economy will recover and when the demand will return to normal. The world's largest economies are growing negatively, reducing demand for petroleum products and consequently crude oil, Zanganeh said. That's all for this segment. We'll see you next week.
Fiscal deficits will widen in all oil-producing countries. For GCC countries, it's estimated that with a change of $10 in the price per barrel of oil, government revenues tend to be affected by 2 to 4% of GDP, gross domestic product, according to Fitch ratings. There are also oil importers in the MEA Middle East region, and they would benefit from a drop in hydrocarbon prices. It's expected this will be offset by other adverse effects linked to the epidemic, such as a drop in external demand.
We don't set oil prices. It is global supply and demand that determines oil prices. Our regional rivals, including Saudi Arabia and Russia, are unfortunately following unwise policies, and they suffer too. Due to their behavior, oil prices fell to 40-year lows. However, I think that if we manage to make our assets generative and earn revenues from debt bonds, as stipulated in the budget law, we will be able to limit consequences. Instead of printing money, which would be catastrophic and inflationary, the government will issue debt bonds and the central bank will execute free market policies in order to curb inflation.
As oil-rich countries make losses, so do we, naturally. However, as Iranian President Hassan Rouhani told a cabinet meeting on May the 23rd, the losses of some are very high, but our losses are much less, because we do not benefit much from the oil market right now due to sanctions. Rouhani, in fact, criticized some media outlets for headlines like, "This was a great success for us and a big failure for some." As the pandemic is for all, so is its partial outcome.
We've envisaged $10 billion in oil export. At current prices, we have to be able to export 900,000 billion per day of oil. But under the present circumstances, official data shows that our production and exports are below the figure. However, in light of what we did by sending tankers to Venezuela, we have set aside the policy of bypassing or resisting sanctions. We effectively overpowered the sanctions and said that, like every other nation, we are entitled to be present in the market. We're likely to have better exports this year.
So in contrast to neighboring states, how hard a blow has it been to Iran, the global oil dip, and Iran's own dip in oil sales and revenues? In recent years, Iran has moved to export petroleum as well as petrochemical products, but declining oil prices have also reduced the prices of these products. Even when steel and minerals are exported, part of the cost of these products come from energy, which has fallen in price. So Iran is likely to run into problems in terms of currency supply. In other words, the country's foreign exchange balance, which has been almost balanced in recent years, will be somewhat negative. Some experts, however, say a cut and decrease in foreign exchange earnings won't impact the economy as such. A 20% increase in foreign currency prices can help the economy if it doesn't lead to a crisis. It can offset the negative impact of a negative trade balance.
نه خب قطعا ما باید منتظر باشیم تا ببینیم.
Definitely we have to wait until the November election in the US. In case Trump is not re-elected, Democrats have made it clear that the US would return to the JCPOA, in which case the sanctions on Iran's oil exports would be lifted and our problems would be resolved partly. But if Trump is re-elected, we have to find another solution like ignoring oil revenue forever. We will have to change our oil strategy. We can, for instance, convert our oil and natural gas into petrochemicals, or we can produce metals because we sit atop the world's 6th largest minerals. We can produce steel from iron ore or manufacture copper. We can become the largest glass or cement producer, zinc and copper. We can also become a major exporter of electricity. Instead of exporting natural gas, we can convert it into electricity and then export power.
Of the many survival skills Iran has acquired, Mr. Ebrahimi points to one byway out of hot water.
اگر ما در مجلس جدید
If under the new parliament and then under a new administration we enact an advanced law about petrol-refinery construction, with investment coming from Iranians living in the country and Iranian expatriates, we will be following in the footsteps of Nigeria, the UAE, Saudi Arabia, Kuwait, India, China and the US, in which case we will distance ourselves from selling raw materials and we will generate value added. We will be able to export 6,000 items of pharmaceutical, industrial and household sectors to our 15 neighboring nations. Such items are by no means sanctionable and we will be able to increase our national revenue.
To put things into perspective, here's some figures from modern diplomacy. Global oil supply is expected to decrease by 12 million barrels a day since May to 88 million barrels next year. OECD stocks have increased by 68,200,000 barrels a day to a total of 2,961,000,000, well over 46 million barrels a day above the average of the last 5 years, a quantity worth 90 days of average demand. To return to base, Iran, in its serious pursuit of a policy of reducing its dependence on oil, has managed over past years to reduce its current budget dependence to zero in the 1399 budget. Whether that can work in practice is to be seen. Mr. Pazocki comments. He's been high up in planning and budgeting for the country.
دولت در لایحه‌ای که تقدیم کرد در آذر ماه به مجلس
In its motion submitted to Parliament last December, the administration has proposed a new source of revenue, which is asset sales. That does not mean pillaging government assets. Rather, it means making state assets generative. That is a normal procedure in all advanced economies. The Iranian government's assets amount to 7,000 trillion Iranian rials, which is a big figure. If 0.5% of such revenue becomes generative, that would help downsize the government and yield positive results.
Donald Trump's inept presidency has dealt America a blow no less fatal than any it's dealt Iran or the rest of the world. It has caused the abandonment of the dollar as the world's principal reserve currency. Europeans even are quietly dismantling the 70-year alliance with the United States and building alternative systems of bilateral trade. And foreign governments are since 2014 no longer storing their gold reserves in the United States. Germany has actually removed and repatriated its 300 tons of gold ingots, as has the Netherlands its 100 tons. That's it for today. Thanks for watching from the whole team. Do watch again at the same times next week and each week after, as you never know what's on. And don't forget to leave your comments and topic requests. Bye for now.